Yes, traders, this is Scapler back on the chats again with another exciting one for you. Today, I want to show you how to approach the market. We'll be looking at a strategy, and this strategy will help you to be able to scalp first, and secondly, to swing. So you'll be able to scalp and you'll be able to swing with this strategy. So I'll make it very straight, short, and simple. This strategy will have three parts. The first part is the ability for you to identify chart patterns. The second part is your ability to know the different trading times and trading sessions. So I will just write time zones. And the third part is we'll use psychological levels. So use psychological levels. Okay, so we'll start by looking at the type of chart patterns. Normally, chart patterns are in various styles, but we'll look at basically reversal and continuation chart patterns, more like double top, double bottom, head and shoulder, which may be something like this, inverted head and shoulders, which is something like this, rectangles, which is something like this, bear flags. I will look at bull flags. So there are many patterns which you can identify. So you'll be using the patterns as well. We'll do our best to identify these patterns. Then the next thing which we need to know are time zones. So what are time zones? We know we have major trading sessions. We have the Sydney, session, we have the Tokyo session, we have the London, and we have the New York. Those are the NY session, the New York session. So these are the four sessions. So you must know the session which you want to trade in, identify a pattern during the session, and trade that pattern during the session. Now the third thing which we want to know is a psychological level. What exactly is a psychological level? A psychological level is basically around price value. They may vary from currency pairs to indices to commodities. So normally for a currency pair, the psychological level, a currency pair has 4 decimal places, so you may have something like, it has 5 decimal places, so you may have something like 1.25400 says 1, 2, 3, 4, 5. So this is how an average currency pair like Euro USD or GBP USD should look like. We'll normally know the pipettes that we usually eradicate the pipette, but in this scenario we'll just leave it like that. We'll not eradicate the pipette here, we'll just leave it like that. So we should know a psychological level should be a price value that either ends with the values 500 or 000, with 500 being the sub psychological level and 000 being the main psychological level. So you have the sub psychological and the main psychological. So the price value, for example, of a normal currency pair 1.254.00, the main psychological level of this price should be about 1.25000 with 3 zeros at the end, or the sub psychological level should be 1.25500. So this is the sub psychological level, and here is the main psychological level. So we'll focus basically on psychological levels. And looking at something like a commodity, for example, gold is a very, very good commodity, and is written as XAU USD. It has a normal price value with like 2 decimal places, and it normally has 4 whole numbers. So we have a price value as 1024.00. So this is normal price value of gold. This means the price of gold is at $1,024 per gold bar. So that should be the price of gold in 2 decimal places and 4 whole number digits. So the round price point of gold, or a psychological value in gold, should either end with 0.00 or 5.00. So that should be how a round psychological level ends. But gold will look at basically major or main psychological levels. So the main psychological level of this price may be 1020.00. So with gold, we'll mark up psychological levels as 1020.00. Then the next psychological level will be 1030.00. The next will be 1040.00. So these are psychological levels. You see, it ends with 000 at the end of the day, just the same way the normal price value ends with 0. So that's it about psychological levels. We'll be going now into the charts to see how those psychological levels can be represented in the charts and how we can use them to make money. So I'll come back to the brief rundown of no chart patterns, trading times and trading sessions, and psychological levels, guys. So that's it. Let's go to the charts. Okay, traders, we're back on the charts here, and we're currently looking at the chart Euro USD with nothing drawn on it. It's just an empty chart, as you can see. It's an empty chart. This on a 30-minute time frame, empty Euro USD chart. So all I'll do is I'll put in psychological levels and I'll start from down to up. So if you look here, remember I said psychological levels, round psychological levels should end with 800, sorry, should end with 000 or 500. So normally when you scroll into your charts like this, you already see these psychological levels that are already listed here. Like this number is 10,500, this one is 00, 000, sorry, this one is 500, 000, 500, 000. So you could just take note of these price values by using horizontal lines to level them. So use a horizontal line there, use the next one here, and you call this line psychological levels. So I already made it in a way that I just need to click my settings here to make it to write by each psychological level. So just click another one of here, so call it a psychological level as well. Let's put some more up there, this which is this price value here. We'll just make it right here, the psychological level. We'll just mark up the place, I'll make it a psychological level. We can go now to the settings to make sure that it's exact price which we want. So here it should end with 000, so just add a 0 here. I click OK, and here I'll just add should be end with 500, so I'll just put 00 and make it should be at the exact point where I want it. This one should end eventually with 00023, and just click OK. Nope, I've made a mistake. This one should end with this one ends with 500. This one should end with 900, not 8000. So it should be 9000, 9123. And I click OK, and then I take the next one. It should be now 8500, 8500, sorry, like this. So you see, just like 1000, 9500, 9000, 8500, 8000, 7500, just keep counting down like that. You can start from down and go up. You have 8500, 9000, 9500, 10,000, 10,500, 11,000, 11,500, as you can see up here. Just be counting, adding 50 pips and going. So these are the psychological levels that I just drew up. And if I zoom into these charts, you will think that I actually did draw support and resistance, because if you look very well, you notice that this psychological level actually has been acting as a resistance there and has been acting down here as a support level, this, and also has acted here as a support level as well. So you see the psychological level has acted here as a support level. And another scenario, we'll see the psychological level down here where it has also acted again as a support level. So you see that support and resistance is basically psychological levels. Anytime price reverses, it must reverse from a round psychological level or a sub psychological level, either ending with double or triple, sorry, either ending with 000 or 500. So these are psychological levels. When we're drawing this thing, we do not know that this is support or resistance. We just plotted as psychological levels. And if we also look back in price and saw that these psychological levels were actual support and resistance values. So if you put the next one up here, let's just put the last psychological level up here. Let's clone this line and put the value of this at 500 and click OK. We get it up here. So you see it just appears up at this area here, and if you look at this area, it has also been a resistance for some time. So psychological levels is one of the best ways to approach the market and trade. So guys, I will go now to gold. I'll go to gold and let's spot our psychological levels with gold. So I'll come now to gold. The psychological level with gold should either end with a whole number and a 0. So they should either end with, for example, you see 2000, it should be 2000.00 or 2010.00 or 2020 or 2030, 240, 250, just like that, as you can see. So these are already, when you zoom into the chart, you see your psychological levels already. So what I'll do is I'll mark them up. I mark that one up, label it psychological level. Mark the next one up, this 2020, label it psychological level. It's a price value, this is not a year, okay, this is a price value. This 2030 psychological level, 2040 psychological level should be here. That is a gold at $2,040. Level is psychological level. So what we do is we just edit for the best that touches. This has to be 2040. Okay, 2040.00, which is the same as 2040. We click OK. This should be 2030. So it's 2030.00. We click OK. this should be 2020. So you click at 2020.00, still click OK. This next one should be 2010. Should be 2010.00. It's 2010. You see as I'm doing it. The next one here should be 2000. Let's just change. Let's delete it and just put from the psychological level there to 2000. Move it down to 2000. Edit it. So we have 2, 1, 2, 3. So there we go. These are our psychological levels. Now when you look at the psychological levels, you will notice that in the price you see a reversal here, very sharp reversal. I notice price reverses exactly from a psychological level. When we're drawing up this level of 2000, we do not know that price will ever reverse from there. If you look up here again, you see the price which is respect this other psychological level here, and if you look up in price again, you see we did also respect another psychological level in here for some time, and we did respect this new psychological level which is up here, and price did reverse from there. Currently we have respected this psychological level as well, which has acted as resistance, and this psychological level below here, which has been acting like support. So the concept is price bounces within psychological levels, guys. As you can see, these are all the psychological levels that price is bouncing within, bounce up, bounces down, and the distance from one psychological level to another should be 100 pips from one round psychological level to another. That's why I see the value here 1000. This is actually 100 pips. It's 1000 points, which is 100 pips. Remember, pips is percentage in points. So guys, that is how we mark up psychological levels. This is a very unique strategy. The next thing which we want to look at is the trading times and trading sessions. We'll be using an indicator called Q zones. So I'll click on my indicator bar here, and I'll be going to the Q zones. It's not showing up, so I need to click and go to Q zones, and this is what we have. We have our Q zone indicator. I don't know what's kind of disturbing. Okay, so let me go there again, guys. We already have a Q zone indicator which is on here. It's actually a tool, not really an indicator. Now, gold belongs to the New York session. It works best during the New York session. So what we're trying to do is remember the trading time, the chart pattern, and the psychological levels. We marked out the psychological levels. Let's look at the trading times now. So we'll come to the setting of these Q zones. Let's just delete this second one. Let me delete this first one and input it again. So I came to indicators, came here, type Q zones by Oscar. To start typing it, Q zones here, show down here, and you choose Q zones by Oscar VS. Now you start it to be in your favorite and click, and this is what you have. So you have a couple of lines: the red line, the green line, and the white line. The red line being the Sydney to the red shaded area, the green line being the London. Sorry, the red line being the Tokyo to the red shaded area, the green line being the London to the green shaded area where it ends here. The white line being the New York to the white shaded area. So kindly delete all the other sessions and allow just one session to be running, which is a place where we want to really focus on. So the white line and the white background, we'll just remove the red background, remove the green background. I'll just allow the white line and the white background. So this is all we're interested in, this white line and the background after the white line. Let's make it black, for example, so that it will help your eyes. So let's make it black like this, and a black line. I think this one will help you. Now the white line is good, or the black line though. Yeah, let's make it a black line, black like that. So I think this one will help your eyes. So we're looking at the black shaded areas starting from the black line. So what we do now is we already have our psychological levels. We want to see price break or above a psychological level or leave a psychological level from the black line. So next we'll go to a lower time frame to look for a chart pattern. So I drop now to a lower time frame as low as the 5-minute chart, and I come only after the session to trade. So I'll go back in time like around here. So I'm only focusing on the areas after the black line. So if you look here, for example, let me go really back so I can have a couple of more examples. So normally we should have let me start from started drawing psychological levels here, which is here. So normally you see that during this time after the white line, price did come down, and if you are a very good trader, you can spot a chart pattern, either our money line. You could spot a money line, which is something like this. Spotted the money line. This was a break of the money line. You enter a long position, enter a long. Was the network this bad? Yep, enter long. Your stop loss is here, and you take profit at the next psychological level. And here you hit about 50 pips. You hit 50 pips in profits, and you're out of the trade. Stop losses could be here tighter, no problem. You're in, you're out. If you allow the trade to run, you could ride it up to the next psychological level and you make over 160 pips and your take profit is smashed just like that. And if you're willing to hold the trade, you could hold it up to the third psychological level and you could hold your trade there and you have a 1:10 risk to reward ratio just like that. So either scalp it or you swing it throughout all the psychological levels till the session ends. You wait again for the next session to come, which was this black line. You see spot the same thing, you spot this chart pattern, you spot it moving downwards like this. You have one and you have the next pattern, you have two. This is more like a bearish channel, or somebody call it a bull flag. So from the bull flag you had the break of the structure, which was here. You enter the buy position at the break of the candle, you have stop losses below and you take profit to the next psychological level, which is somewhere around up here. I think it's not marked that around up, but there should be a psychological level up here. So let's start to put it up. What's the coordinate of this one? So the next one should be 50. So let's clone this and put it at 50. Let's clone this and make the next psychological level at 50. Edit. Oh, that's 2050. Make the next one at 2060. So this is 2050. Let's make another one at 2060. I'll clone this one again. Edit it to 2060. And here we go, 2060. And here we go. You see price actually went towards the 2060, which is the psychological level up here. And you're still able to bank up a lot of cash, you know. Although with experience, you eventually take profit close to this area, which is the resistance zone here. But that's the one to fall just like that. You come again to the next day, you see price has left the psychological level, so it's eventually going down to the next psychological level. So if you're entering a short position, anywhere around here where it breaks out through the from the psychological level, you could step in here. Stop loss is somewhere up there. Take profits down like 2 psychological levels, and you're up in a lot of profits. In 5-10 minutes, you hit TP.